Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. mid-session brief. Today, we're going to talk about the week ahead. We're going to talk about the key events that are coming our way a little bit later this week. We're also going to talk a little bit about U.S. CPI tomorrow. I think that's a big one. We're going to have CPI live for you. Be sure to tune back in. We have a dynamic situation right now in the crude oil markets that we sort of really are watching something called rollover, and we need to be very careful. Trading crude oil when the volume dilution is where it's at. So if you're not sure what volume dilution is or what rollover is on a futures contract, stay tuned. I'm going to go ahead and run through that with WTI. I'm also going to show you exactly where to find the WTI contract on your switch markets, your MT5 platform, and then we're going to look at some U.S. oil CFDs and maybe even a little bit of futures price action. So I want to welcome everybody back for another week. This is week 29. Today we're going to go over the key events and really what's going to be moving the markets this week. I'm optimistic that we're going to have a great trading week. I really am. Last week was okay. It wasn't great. There wasn't a tremendous amount of opportunities. It is very obvious to me right now in our markets, these are the dog days of summer. There's a tremendous amount of people that are out on vacation. There's a tremendous number of institutional traders that aren't really, I wouldn't say they're invested right now in their trading. They're taking some time off. They're going fishing. They're having summertime with the family. And that's exactly what we're starting to see in the markets. We're seeing some movement. We are. But things have slowed down dramatically since that springtime frenzy where we had tariffs, we had trade wars, we had pretty much everybody hanging on Trump's every word to really move the markets dramatically one way or the other. We don't see that now. We don't see that now. We're in a situation where things are very quiet. They're very, what I would call rotational. You're not seeing those breakaway trends, so we have to sort of adjust our attack plan toward the markets accordingly. So if we're trying to trade trends and breakouts, we're probably going to be struggling a little bit. However, the retracement levels worked very well last week. We also got in on a couple pretty good 920 crossover trades on the crypto sphere. So there's a lot of ways to trade these types of markets. Just remember that sometimes when things slow down, it's not necessarily the big trends and the big breakouts that pay us off. It's being conservative with our profit targets and also understanding where our macro support and resistance levels are. You guys can trade this. You can trade this environment very well. You just have to tweak the way you think just a little bit, and you should be able to make your bones. You can make your bones in flat markets. I love flat markets. Today was definitely a game planning day, not necessarily in any hurry to jump in there and try to assume a lot of risk. I like game planning on a Monday, and we're going to talk a little bit more about that. So good to see everybody back in the room. Yes, sir. Good to see you, T. Marina. Good to see you, T. It's Batiste. Itu Miling Batiste. I'm sorry, I just butchered your name, but how you doing? Thanks for joining us here today. Universal, hey Shane. That's why I wonder. Thanks for the info on the vacation in July, etc. Well, yeah, I mean you're spot on. I mean we got to really be careful, be aggressive but careful. I know that sounds like I'm just talking in circles, but things have changed, and we'll look at the charts. I'll show you the proof. Things have definitely changed right now. Dave F19, good to see you, Dave. All right, guys, first thing I want to start off with is WTI crude oil futures. Now, a lot of folks don't trade futures, and as a matter of fact, if you are an international trader, more than likely you're trading crude oil either on the spot market or you're trading a CFD, and that's great. That's market access. This is what I trade right here. I trade the futures contracts because they are liquid, they are volatile, but I'm always very, very, very cognizant of what's happening with the volume. Now, remember, a futures contract, they roll over about every month for WTI crude oil. So right now we're still trading August, and we're getting ready to roll into September. So this August, the contract has actually held on a little bit longer than I thought. I thought we were already going to roll to September, maybe towards the end of last week. Hasn't happened yet. Sort of a real stubborn rollover here, and it's brought some volume dilution and really brought some challenges into the WTI markets. Last week, I took a pretty good loss on a crude oil trade that I thought was a really good one. I couldn't really figure out why I got caught up in a sweep that went against me, and one of the reasons was the volume dilution definitely hurt my depth of market. And what that means is the markets don't work as efficiently. A lot of times the price action's choppy, and it's really hard to trade. So I would be very careful right now at WTI crude oil. We're seeing this. It looks to me like we're going to roll over probably tomorrow during tomorrow's session, but we're going to roll from August to September. And you also see this backwardation. Typically, this is exactly how futures contracts work. The current contract, the front month, typically is being priced more than the deferred month. But you can see this spread right here is significant. It's about 123, 133, something like that. We could easily see that spread come in over the next 24 to 36 hours. I'm interested. I'm interested in seeing exactly what's going to happen here. Lots of different ways for spreads to come in. I'm not going to talk spread trading because it is complex. But if you're trading WTI, you need to be aware that that contract is going to roll over. Now, this WTI contract right here, this is on your MT5 platform, and all you do simply is just drag and drop, and that'll get your chart up and running. You can also, if you don't have your oil up on your market watch or your market analyzer there, you just go right in here and you type in WTI, and that's going to give you a good look at your spot WTI crude oil contract, which is what's offered at Switch Markets for WTI. So the prices are going to be a little bit different, but it's still going to give you access to trading oil. So that's really what I would stress here is if you're on MT5 and you need to know or you want to trade crude oil, that's how you do it, WTI contract. In any case, you can see right here, this is a daily look at what price action's done and really this big 2-day break back in sort of, I would say, late June, mid to late June. And now we've sort of just went sideways on this. So I'm looking at this. These daily ranges are really small. And they're really small. They're dojis. Here's a little bit of a break. There's a pullback. There's a break, doji, pullback, break, pullback. It's really what I would call a killing field. So if I'm trading WTI, the first thing I want to know is I already have a pretty good idea what downside support looks like, and that's going to be where it's going to be right down here. Very easy, very simple to do. You're just looking at these swing lows right here. This downside support, probably somewhere right around that 60, 65 area, somewhere down in there. That's going to be your downside support. To the top side, I go to my weapon of choice, which is the Fibonacci retracement sequence, and this is really what I would be looking at. Top side resistance, rotational market. This could be very lucrative. This could be very good to us. And right there, you've got sort of a little bit of a topside resistance right around 70, 50. Love that sell if we get a chance to sell there. Absolutely. Right now, we're trading about 67, and your downside support is going to be probably right around 65.50, somewhere in there. So we're trading sort of in a phone booth right now, 65.50 to 70. It's about a $5 range, which is a pretty good range. It's not a bad range for WTI, but take a look at these daily highs and lows. I mean, it's just an absolute killing field in there. It is Chop City, and when you get involved in Chop City, it's really hard to be consistent with your trading. Understand the macro levels, understand your support zones and your resistance zones, and you're going to have a much better chance at success. If not, you could easily get chopped up trying to go long and short. That's why a lot of trend players are getting destroyed right now trading crude oil. They're trying to pick a breakout either way, and it just hasn't happened. I'm still leaning toward the bearish side of this market, but there's no question that the supply out of the United States isn't where we thought it was going to be at this point in the Trump administration. And there's a lot of folks that are saying, still got some angst in the Middle East. We're still looking at bullish pricing, potentially above $65. I'm going to wait and see how this market unfolds this week. It's going to be a bit of a challenge with that rollover happening. Now, if you are trading the U.S. oil contract right here, this is CFD. This is a good look at my technical framework. And what do you have here on a monthly level, or excuse me, a monthly chart, is a good look at a market that just is sort of milling around. It's not really doing much. There was the big dump in April, and that was on the tariff fears, fell almost 20%. That was a huge sell-off. Since then, we've sort of bought back that big sell-off over the last 90 days or so, and now we're just sort of camping out right in the middle of this range. Top side resistance, we've got a 13-month EMA up there at 69.88. That's a pretty darn good level. I would keep an eye on that. Now, with this U.S. oil contract, remember, when that rollover does happen, when we do see this rollover roll from August to September, your U.S. oil pricing is going to change. So be very careful. Don't get overexposed there. Understand that that's coming probably, I would say, a maximum in the next 24 hours. I would be surprised if in fact, we keep trading August any longer than tomorrow. I think that you're going to see rollover probably occur later today. In any case, right here's the same basic level. It's just a different contract, a different product. The numbers themselves are just a bit different. There's the big sell-off right there, and then we go down, and what do you got? We got failure right around 38%, which is right around $69. You remember our last level on our WTI contract was right around 70. So the numbers are different. The market structure, though, is the same. These are a little bit bigger ranges in that WTI spot crude, but this right here, that's your topside resistance right around $69. I would be very, very tentative to be buying 69s. I would be selling 69s, and right now we're right around 67.18. We're going to have a trade idea out a little bit later today, and it probably will deal with crude oil. I got to look around the markets. I want these markets to set up a little bit more before we make any hard recommendations. That's for sure. Hello from Botswana. Wow, Botswana. We got a truly global audience here. It's always good to meet everybody from all around the world, that's for sure. As far as what we need to be looking at for this week with regards to just trading, it's going to be a tough week. It's going to be a tough week because we've got limited liquidity, but we've got these huge economic events that are going to shake the markets up. Excuse me, I had to get a little coffee there. Still getting going for the week. That's for sure. Remember, if you want to trade anything that we're talking about today, head on over to Switch. If you're an international client outside of the United States, Switch Markets can get you up and running. If, in fact, you are inside of the United States, your Switch Markets isn't going to be able to service or cater to you or your market needs, reach out to me just via private message over at How to Trade, and I'll be sure to maybe make a couple recommendations of places where you can go to trade either Forex or futures or maybe even some crypto products. Now, the big thing we got to remember here is it's Monday. And I'm not a big fan of trading Mondays. I say it pretty much every Monday, but the Mondays and Fridays are a huge part of your market psychology. They're a big, big part of your psychology. They're where we preserve momentum and generate momentum. Now, the biggest thing that I was always taught, and I've really stuck to it, don't go into a hole on Monday. Now, you're going to take risks, and if you lose on a Monday and you go home in the red, that's fine. It's going to happen. You're not going to trade every Monday perfectly. But what I mean is you don't go into a deep hole. So let's say you're trading 1, 3s, and 5% of your account. You don't want to drop 15% of your account on a Monday. If you take a normal daily loss, that's fine. You're still operating within the framework of what you do. Remember, there's a lot of trades in front of us this week. Tuesday, Wednesday, Thursday, business picks up. Okay, we're going to have some good trading. CPI, PPI, those are big numbers. But for right now, today, I'm seeing nothing but just slow action. Well, we're just seeing it. It's very, very slow. So if the markets are slow, our daily ranges are still sort of setting up. We don't see anything that's really jumping off the charts at us right now. I would be very tentative to jump in there and take huge risks. I wouldn't be doing it. I would want to be taking small profits if I could get them. I wouldn't really worry about grabbing a 5 or a 6x runner. I think that if you're going to take a position on a breakout, maybe an orb trade or something like that, you probably want to do it tomorrow, Wednesday, and Thursday. Probably after your CPI or your PPI release, that could be a real good time to be looking at maybe a market that's going to break. For right now today, though, we are just going up and back, and right now is just an absolute, what I call a killing field. Traders are losing money today. They're getting stopped out, and they're getting stopped out on price action that just doesn't mean anything, and it really doesn't. Now, it may pick up towards the end of the day. We may see a big move, but I'm looking at U.S. equities right now. You know, you're basically at scratch. You're at flat. And when you're at flat, you're going to really run into trouble trying to pick a direction. It's even tough to trade rotation when a market's flat because sometimes the market just doesn't move enough to give you that disequilibrium play back to a mean. And these are sort of advanced concepts, but I'll show you exactly what I mean on the charts here in a second. So this is my Monday template. This is what I'm thinking every time I go in there on a Monday. I want to trade to the positive. I don't want to go into a hole. I want to focus on my analytics. I want to game plan for the week ahead. I want to make sure that I'm in a good position to trade the rest of the week with being aggressive and from a position of strength. I don't want to trade the rest of the week trying to make back what I lost on a Monday. It's the worst thing for your morale of all time. It's almost as bad as losing all your profits on a Friday. That's bad. So the idea here is we want to game plan. We want to know when we want to trade in the next 4 days, and we want to get it going. So if we're taking small profits and we're getting out of the starting blocks here and we're really getting into our trading week, today is a good day to be using your head, not necessarily taking huge risks. And if you stick to that type of game plan, you're going to trade Mondays relatively well. You're not going to blow out your account on a Monday. And I've had some bad experiences on Mondays, bad ones. And it's what I do. I just don't do it anymore. I don't sit there and say, okay, I got to make back $5,000 because I lost $5,000 on a Monday. Okay, by Friday I'll have it back. Yeah, but you just broke even. We got to start making money. I mean, we got to think about making money here, not necessarily just breaking even. So don't go into a hole on Monday. Lewis, 79. Good to see you, Lewis. Let me see Isak. Engelbrecht, completely out of line here. There is an indicator called a 3 EMA where you only use one indicator to get 3 adjustable EMAs on your chart. This solves the limitation on indicators. Yeah, absolutely fantastic, Isak. That is one way that you can do that on TradingView. I know a lot of you use the free version of TradingView, and I believe you only get one indicator to put on your charts. Me, I don't even really think about that because I got the elite package or whatever. I can as many indicators as I want. But good point, Isak. You can use the 3 EMA indicator there, and that'll count as one, and you can use that free trading view to get up and running. Let me see. Nat Niles. Good to see you, Nat Niles. Hi, how are you? If you guys have any questions at all, be sure to ask. Okay, so Monday's game planning. Tuesday, tomorrow's U.S. CPI. That's a red letter event. I'm going to have that live for you, so I'll be up and at 'em very early tomorrow morning. Be sure to tune in for our U.S. CPI live coverage. We're going to trade it. We're going to do a lot of different things. 9 EMA probably with RSI. We're going to be looking at the 920. I like the crossovers around those big events. I think we can make a little bit of money there and do okay. Wednesday's PPI, the Producer Price Index. That's another big one. That's another big inflationary metric. We're watching that closely. We want to see if there's any signs that consumer prices and producer prices are coming down here in the States, because they've been high for so long, really since COVID. So we're definitely going to be watching PPI. Thursday's retail sales, that's another big number. A lot of folks are going to be watching retail sales because it's going to be sort of that leading indicator for maybe, just maybe, we're going into a recession. We're watching retail sales closely. I very rarely even watch retail sales. I'm watching it closely this week because I want to see if that economy is in fact contracting. That's what we want to see. Friday's housing starts in the University of Michigan survey. That's not a big news day at all. That'll be just a textbook, no donation Friday. We'll do our best to bring you some trade ideas and analytics of the week that was. Hopefully, we're in cruise control by Friday and just looking to maybe just take a little bit of our profits home with us. All right, news of the day today. There was no news, but this right here is interesting. It's our weekly T-bill auctions. You'll have to excuse me. I'm having a little bit of trouble speaking today, but our weekly T-bill auctions, that gives us a good idea of what government debt is selling for. Remember, as those yields go up, we believe the money supply is going to contract, and that's a function of perhaps the Federal Reserve holding on to really robust interest rates higher for longer. Well, what did we see today? We actually saw interest rates come down on the 3-month, and they also came down a little bit on the 6-month. So those yields, as they come down, that suggests that maybe there's going to be more money in the system, and that does suggest sort of a dovish U.S. dollar, which we haven't seen it. We've seen a little bit stronger dollar today, up about 0.25%, but these 3 and 6 months sort of show us that we are expecting perhaps that rate cut to come maybe sooner rather than later. Now, here's a real quick play or a quick preview of the U.S. CPI. I'm not going to spend much time on this. We're going to get out to price and look at some trades. If there's any markets at all you guys would like to look at, just let me know, and I'll be sure to pull a chart and work them up. Core CPI, though, we're expecting to rise month over month in June to 0.3% from 0.1%. Core CPI year over year, 3.0% to 2.8%. You guys know what I'm going to say. Prices are still going up, and we expect them to still go up. CPI at 0.3%. Now, the CPI is going to be a little bit different here. We're going to be looking at core CPI a little bit more this time around, and the reason why is because of the gasoline prices here in the United States. This is really peak pricing season right after the 4th of July in these summer months where everybody's out with the motorhomes and the campers, and they're all having fun burning a tremendous amount of fuel. Typically, that's going to rise. That's going to jack that CPI up a little bit, sort of artificially, because the fuel really hasn't been stripped out of the equation. So we're going to be watching core CPI, but I tell you what, we're expecting core CPI to rise, and that's going to be an incredible thing if it does. If we see a hot CPI reading, there's not going to be much case to cut interest rates. There just isn't going to be. All right, we got a question here. All right, let's go ahead and answer it. I'm going to look at silver here in just a second. Silver's on a breakout tear. Let's see. Nat Niles' question. What account size do you use as a professional trader? Interesting question. I'm going to give you a couple of hints. I'm not going to tell you exactly the size of my account because the money in my account isn't necessarily indicative of how much money I'm going to be trading. And I'll go over that with you in just a second, Nat. Let me see, Donald. Do you do volatility? Love volatility. Yeah, we trade. We pretty much everything we do is based on price action and volatility, at least with Fibonacci retracements, and also our crossover strategies. That's all about volatility. Volatility index, we look at the VIX every day as well, and that one's up a little bit, about 3%. So, yeah, absolutely. Kindly analyze gold. Trader FX, absolutely will do. Ahead of CPI. Yeah, we'll break down gold here in just a second for you. And see, T. Marina, hey, Shank, we check out the dollar yen. Absolutely, T. No problem. So, Nat Niles, question, what account size do you use as a professional trader? Well, here's the deal, Nat. I'm not going to tell you exactly how much money I have and how much money I put in the markets. I'm not going to tell you that. 2 reasons I'm not going to tell you that. Number one, makes you a target. I don't want anybody really out there to know how much money I have. I will tell you this. We live a pretty good lifestyle. The wife and I do. I would say it's comfortable. We're not up in the millions. Okay, I'm not trading millions of dollars. I limit my risk. And the way that I limit my risk is I have X amount of money that I know I can put in play at any given time that I can trade. X amount of money, and I put about 20% of those funds in my trading account at any given time. And the reason why I do that is because I believe in counterparty risk. I believe it's very real. And the last thing I want to do is have a big chunk of money in with a broker and watch that broker go bankrupt. Now, I'm not gonna really sponsor any broker here. I'm not going to tell you my futures contracts, my brokers that I use. I'm not going to mention their names. I do business with probably the biggest one in the United States. And the reason why I do business with the biggest one is because if they're the biggest, they got the most money and the most resources. They probably don't have as great a chance of going broke. But you have to remember that when you're doing business with brokers, whether it's the big dogs, the little dogs, if you're doing business with Switch, any of them, these folks are in the market. They're in the market to help you facilitate your trade. That's how they make their money. So they have really unless you're working with just a chop shop or a pump and dump outfit, and there's a lot of those out there. There's a lot of fraudsters out there. You need to make sure that you work with brokers that are reputable. And typically in the United States with a futures broker, there's no excuse to not have a futures broker that's licensed and regulated by the CFTC. Okay, that's going to say that, okay, they meet certain liquidity. They're not going to go bankrupt on you, and they're not just going to take your money and leave. So that's very, very, very important that you understand that about a broker. Now, for me personally, when I first joined the markets, when I first got in, we watched. I'm not going to name the firm, but the 7V Bar Trading Group, which was my uncle and a couple of partners and me. We watched as some of the money was lost. Some of the tradable cash was actually lost when a certain firm went under. When they went under, and it was a loss to the tune of about 50 grand. And when those things go bankrupt, when the firms go bankrupt, you have to get in line for your money. And essentially, what you have to do is you have to file a lawsuit, and you have to try to figure out a way to get your money. Now that's really hard. That can be really, really hard. And I learned a valuable lesson by that. And I'm not going to mention the name of the firm. You guys can probably Google it. It's right around 2010 this firm went under. And I made a decision right there. I said, okay, I was just a beginner then. I really didn't have any money to trade, but I made a decision. And I said, listen, when I have the money to trade the way that I want to trade, I'm going to make sure that I don't have it all in one place. And so I put my money in according to my risk parameters. Meaning, if in fact my broker did go under, it wouldn't kill me. I would lose some money, and I would be upset, and I would get in line and try to get a payout, just like everybody else. It doesn't work. Typically the money's gone, but I would make sure that it's not completely ruined. So to answer your question, I put about 20% of my available capital in the account at any given time. And on Thursdays, typically, if it's been a really great week, Thursday I will take a payout. Or maybe Friday I will take a payout, and now they do ACH. So they just transfer the money into your bank account, and there's no bank wires, there's no fees, nothing. So I trade for cash. Now a lot of folks don't. They want to build that account from they'll start out with 5 or 10,000 and try to build that thing into just 50 or 60 or 70,000. So they have these huge accounts, and that's great. If that's the way you want to go, that's great. I don't do that. I play for cash. I want to get paid every week. That's the way I do it. And if in fact I want to play for more, then I just deposit a little bit more. But I don't go over 20% of my net worth in a trading account at any given time. That's just me. That's me being paranoid. But you guys can do whatever you'd like. That's for sure. Let me see. Clive, hi Shane. Good commentary. Thanks, Clive. I appreciate it. Makes sense. Yeah, T Marina, you don't want to get caught with your hand in the cookie jar. And unfortunately, counterparty risk is very real. It's very real. I witnessed it. I saw it. I didn't want any part of it ever. And so now that's how I sort of allocate my risk. That's for sure. Lewis Shepard asking about other people's money is dangerous in trading as it can strongly affect your trading expectations. That's exactly right, Lewis. There's no way I'm going to sit here and talk about size. I've been known to trade some size. Not as big as these other guys on YouTube. You'll see that they're all multimillionaires. But some of the positions that I've taken in the last month have been significant. And for a young retail trader or somebody that's just starting out, if they try to use that size without the proper capital, you're just a few swings in the market away from being bankrupt and broke. And so I really shy away from how much I've shown some things on X about having a big day here and there and showing what is possible in the markets. But I really shy away from anybody out there trying to trade the size that I do. I don't want that. I don't want that out of any of you because you'll get overextended. and it won't work. But if you take your time and just build, then you can do it, and you can do it safely. That's for sure. Yes, Golden. What about the Fivers prop? The Fivers, I'm not going to vouch for really anybody as far as a prop firm goes. There are some great ones out there. I know the Fivers is very popular. So I really say trade prop. If you guys don't have the money to trade prop. Absolutely. Let me see, Nat Niles. I didn't realize it was rude. I apologize. No, it's not rude, Nat. It's not rude. We're not sensitive on this stream. You guys say whatever you want. I mean, believe me, I'm a big boy. I can take it. It's not rude. It's just what we want to do is I want to make sure that there isn't a young trader out there that says, okay, well, Shane's trading 10 and 20 lots in future, so I need to do that to be successful. You don't need to trade huge size right away. Start slow. The last thing I want to do is encourage somebody to jump in and start taking huge positions, because odds are you're going to probably win right away, and you're going to get used to making a lot of money, and you don't understand the risks you're really taking. So the money end of it is really, it's touchy. It's touchy for me. I don't want to really ruin anybody's expectations. It's very important. Let me see. Do one live trade. Yeah, we're going to trade live tomorrow, Donald. We're going to trade live tomorrow, CPI. I don't see any trades at all on the board today. That's why we're talking psychology. Do you use the 9 and 20 EMA? Yeah, I'm going to go ahead and pull that one up here in a second. Lewis, I use the Fivers. Great. If you guys are interested, go check it out. All right, here we go. Let's get rolling. I got a whole list of markets, and droned on long enough. Let's get into some price action. Set the table for this week. Okay, here we go. Silver. I bring up silver because key levels are everything. I talked key levels last week. Really enjoyed that live stream. Not too many people watched it. I didn't get many questions, and that's okay. Got some critiques going, oh, this is the old way to trade. And I go, hey, listen, it's old because it works. This is the key level I'm watching right now in the silver market, and it's 40 even. And you can see right in here, well, the last time we traded 40 was back in the global financial crisis of 2008 to 12. We were trading it live in 2011. So be very careful with your silver market from that 40 zone. I think we could definitely be in for some short-term selling, but you definitely, I mean, for me, it's just bullish here. And this is a monthly chart. I always like to start with my macro levels and just define my support and resistance zones. This is a pretty good area. Bidding silver right above 35 is pretty good. If you get a big pullback, nothing wrong with that at all. Maybe a short scalp right in front of 40. Could do it. Just make sure that you stop yourself out above 40 if, in fact, the market breaks. That could definitely be a challenge. What we want to do, though, is we want to be smart, and we need to understand that, yeah, silver is definitely bullish. There's no two ways about it. Here's your weekly chart right here. Gives us another real great Fibonacci retracement sequence. Spike low, spike high, and this is a fantastic zone right there, 37.66. I like that one a lot. That would be my bid. You'll see right here we've sort of started off on the bearish foot this week with silver. A little bit of a pullback's natural. That's basically how markets move. They don't go in straight lines, but right, something like that. Those are probably two pretty good bidding areas, 37.66, maybe 37.75. That's pretty solid. And then 62%, 36.75. That's probably pretty good as well. Back into that golden zone. I think that's a fantastic level. So I would be a bullish, at least until we hit 40. And then I expect sort of a short-term fight between buyers and sellers at 40 for silver. So if you're trading silver, definitely be careful, but this looks to me like it's a target-rich environment, at least early in the week. Bitcoin, I did want to talk a little bit about Bitcoin because I think we've nailed this one really spot on with what we've been talking about for a topside price prediction for Bitcoin, really all spring long. I've been calling for 125 for a while, and right now we've got a high up there right around 123, 236. That's a fantastic call. We made that call way back in here. I was saying, listen, 100,000 is going to be your support zone. We actually had a bid somewhere down in here. We just didn't quite get our entry down at like 89, something like that. But this 920 EMA, we just had a question about the 920. 920 dailies are pretty good when you're talking about stocks, you're talking about crypto. Something you can actually just invest your cash in and sit back, take a position, and wait. Where the derivatives, you don't get forced out because the leverage is too big. Something like this made people a lot of money. This crossover developed back on the 26th of June, and your crossover bid was right around 107, and you really got the pop for about 15%. That's fantastic work. Things like this right here keep the institutional money coming back and back and back. Anytime they can get their eyes on 15%, maybe 14% and get it in just a few weeks, That was an absolutely fantastic trade and really what the 920 is designed to do, and that's to get you in on moves. So this Bitcoin went right up to 125. As far as how am I trading Bitcoin right now? I'm not in the Bitcoin market, but I do like this area as being potentially a little bit of topside resistance. I would be very surprised if we don't fight it out at 125 for a while before we either break or reverse. So that's sort of what I would be looking at. We're looking at big round numbers, guys, right now because these markets are trending. Silver's trending. Bitcoin's trending. Typically, all that suggests that our inflation is going to go up, that we're thinking inflation is going to go up, and that is pretty much our hedge. All right, we had a question out there for gold and then the dollar yen. This is interesting stuff right here. This is a daily chart here, 920 EMA. Let's go ahead and just take a look at where we're at. And we've got this daily setting up. So we've got a gold buy setting up from about 33.50. Watch today's close very carefully. If, in fact, we close above these EMAs, and it looks to me like we will, but you can see it's very close. This is our coded 920, so if this bar is gold, if it turns out to be gold today, that's a bid. So theoretically, and I don't want to get too far ahead of myself because we still have a lot of trading left for today, but right in there, if it closed right now today, if it closes the day right now at these levels, then we're looking to bid. Okay, so if we bid the market or just buy into gold, our stop loss is easy. That right there beneath that swing low, you take that 32.80. You're up here at about 33.50, and then you're looking to do what? Get at least a 1-to-1 out of this. And if you want to shoot for higher, you certainly can. But this right in here, you're probably looking at the top of this market, this liquidity sweep right there for you ICT traders. That liquidity sweep more than likely is a pretty doggone good topside target. So if you're interested in maybe making a gold play based on the 920, that's it. Wait for today's close, though. You got to wait for the 9 to cross over the 20, and then it's guns up, fire away. Do whatever you'd like. All right, let's go ahead, and I'm going to give you the breakdown. My breakdown on gold, it's typically a little bit different than the 920s and things like this. Let's go ahead and just start it fresh, wipe off everything. Now, what you see here in the spot gold market is really a tight price action, what I would call a picket fence. Weekly, you've got a nice big spike up there. You've got to always know where 3,500 is in gold. That's the biggest number in there. Know where that is. That's the all-time high. The sellers stepped up. We talked about that right around 35. Either the buyers or the sellers were going to win. So far, the sellers have won. They've defended 3,500 a couple of times, but I would bet that we're going to go test it out again. Right now, we're at 33.51. Still sort of have a bullish type of a market environment for gold. It's hard to sell gold right now. You definitely probably want to be to the long side of it. The problem that we're having is how do we get any sort of trade location? I mean, if we buy 33.50s, okay, that's great. We have a 920 that helps us do that. I don't have a problem with that. But look at this. I mean, what do we really do with this type of formation? It's just a picket fence. It's spike high, spike low, retracement, inside, spike high, pull back, pull back, pull back. I mean, it's a nightmare. It has no direction. So if the market really has no direction, we got to do a couple of things. Number one, we have to understand what the news cycle is. CPI is going to move gold. We know that. Number two, we have to understand the macro trend. What's the macro trend? It's bullish. It doesn't get any more bullish than this. Hundreds of millions of billions of dollars were made on this run-up that really began back in January of 2024 in earnest. And from that level, we went from right around 2,000 up to 3,500. That's a pretty good payoff. Pretty good payoff. You pretty much doubled your money. Well, now what do we do? Well, we got a fight going. 3,500 appears to be the top of this market. I still like being bullish, but this right in here is really hard to trade. It really is. So to the downside, there's a couple levels that I would be definitely looking at and that I would write down, at least for this week. You're going to be looking at that EMA down there, that 13-period EMA. That's my favorite, 13-week EMA right there is 32.8498. So 32.85 is a big deal. Maybe 33 even. That's a big deal. That's probably going to grab a lot of bids. You'll see that we've tested the moving average a few times and can't seem to close beneath it. That tells us what? It tells us that the bullish trend is still very much intact, and we want to buy when we get an opportunity to do that. So let's take this down to a daily chart and see if there's anything we can really do. It's tight. It's tight, but if we want to do it, if we want to get in there and work it a little bit, spike low to a spike high, something like that. 38%, pretty much they already bought 38% from 33.40. Keep a close eye on that zone. It's not a bad one. If you wanted to get involved down here, maybe 33.18. I love the golden zone. That's probably a pretty good one as well. You just got to make sure that the top of this market stays today's high and we don't rotate any higher. But this right here, That's a pretty darn good sequence right there if, in fact, you're looking at gold. I would be buying pullbacks. If, in fact, you wanted to get long and be aggressive here today, we're watching our coated 920. We may, in fact, get that gold bar. And if we get the gold bar, then we buy it. Stop loss right beneath that swing low, and you could be looking for a 1-to-1. This is almost a 1-to-2. A very interesting trade. Do we make a run? Does this give us a good position to make a run at that 3,500 level? I would say yes, but it's inflation week. It's CPI, it's PPI, it's all of that stuff. So we got to be very careful with how we expose ourselves to those big market movers. 1 to 3% of your account balance. If you want to bet 5, I'll give you 5%. But anything over 5, and I gotta shake my head and say, it's too risky. It's too risky. All right, let's see right here. You wouldn't know unless you ask. I hear you, T. We're going to go ahead and wrap this up with the dollar yen right now. Lewis Shepard, I got to say, though, I've been with Forex Signals, how to trade for years now, and you're always a wealth of knowledge. Thanks, guys. Yeah, the community has definitely gone through a lot of changes, Lewis, since the Forex Signals days and when I first started with all the other trading coaches, and and then there was one. There's just one left, and I've enjoyed my time doing the live streams and working with traders and having an opportunity to put out some trade ideas. And I think we've done some pretty good content over the years. I think it's been relatively good. What can we do in the future to make things better? Well, any and all suggestions are welcome. If you got anything to tell me, any suggestions, just go ahead, head on over to How to Trade, click on the private message icon, send me a message. We'll be sure to work them in. What are your thoughts on the Australian? Keith Smith, what are your thoughts on the Australian dollar, US dollar? Okay, we'll do that one as well. Hey, Mew, hi, Shane. Good morning to you. Yeah, it's getting almost afternoon here in Montana, about 11:30. All right, we got 2 more pairs. We're going to look at 2 majors. We're going to look at the dollar yen and the Australian dollar, US dollar, and then we're going to call it a day. Get ready for CPI early tomorrow morning. Okay, here we go. We can start out with this 920 daily. I do like it as just sort of a basic way to look at the market. You can see, you've really got some chop. Like that would have been just a losing buy. That would have been a tough one to take with that big of a bar. This right here, these sells didn't really seem to work either. This bid right here, that bid right there is working well. So if we're looking at a daily chart, US dollar, Japanese yen, you got a pretty good little rally there on that 920. So let's go ahead and just pull it up and look at some Fibonacci's and some market structure. Very interesting type of a market. It looks to me like the U.S. dollar is starting to get back some of what it lost to the yen over the past, 9 months or whatever. But you definitely have the volatility there to trade. Do we want to trade this? Is this a tradable asset for us? Absolutely. This week, you're looking at the yen. You're probably going to get a big move on CPI. So how do we sort of game plan and get ready for it? Well, we've got to understand what the market's doing. I'm big on market structure. I'm big on understanding when a market is coiled up and ready to break. There's no question about it. We've traded inside of April's range for the last 60 days, and now it looks like we're going to start to threaten the top side of that range. And that's huge. That's absolutely huge. So if, in fact, you're going to be, trading this yen, you need to be very, very cognizant of a potential breakout here. Now, to the top side, you definitely got to respect the 148 level. 148 is our 13-month EMA. That's big. That's big. You don't want to throw that out with the bathwater. You want to make sure you know where that is, but you also want to know where last month's high is. Last month's high right there at 148.03. This is going to be interesting stuff because theoretically we would wash out a lot of shorts if we trade above last month's high. I'm not necessarily convinced we're going to do that because our moving average is right there as well. So give this one some time to breathe. Give it some time to develop. We've broken above 147. We had 147 sells on the board for seemingly ever. They were pretty darn good multiple times, and now we're breaking higher. So if we're breaking higher, do I want to be long or short? It's tough because we're still inside of last month's range. That tells us we're still flat. If you wanted to get in the market and be hyper-aggressive and try to get the jump on CPI, then you certainly could take the long. You can see what happened. I mean, this level has been just absolutely fantastic. That trade right there on the 9th of July was beautiful. That's a nice little pullback. It's fantastic stuff. But we're trading above that zone, and we're moving higher. And I'll tell you what, this market could definitely explode to the top side, and I would be cognizant. I would be very cognizant of the top side of this market. All eyes on last month's high, right around 148, 148.03. But I've got that moving average, that monthly moving average up there at 148.08. Be careful. Be careful. That's all I got to say. That's a challenging trade to take. Personally, I would love to play the breakout above 148, but with my moving average there, That sort of put a damper on that. I think you could do pullback buys from this zone here with this 147 area. It was great resistance. I mean, what once was resistance is now support. If you do get that pullback and an opportunity to bid from there, that's probably a pretty good level. Keep an eye on 147 to the downside as being a nice support zone. To the top side, if we do break above that 148 level, we're probably going right to 50%, 149.31. And if, in fact, we do get that big of a rally, then we're up there right around 151, somewhere like that. 150 is a big round number. There's a lot of opportunities to sell this thing. We just got to be sure that we get on the right side of the market. All right, one more. Australian dollar USD. Let's go ahead and take a look. I love the Aussie. It's a pretty good pair to trade. As far as, what can we expect? CPI is everything. So, when you're trading the Aussie, you're trading the yen, you're trading anything, you've got to be very aware of that CPI drops in about 18 hours, 18 and a half hours, it's going to drop. So be careful with that. That's huge. I mean, that's going to be the game this week's inflation. This type of pullback zone right here, I really like 38% on a 4-month winning streak, something like that. Yeah, 6-month winning streak. If you do get this pullback right down there to 63, of course, we would want to bid that. Just don't think we're going to get it. 13-month EMA right there at 64.50. That's a pretty good level as well. I'm going to go ahead and mark that on my chart because I want to see where it lines up with something on maybe a weekly or a daily. It's what we would call exculpatory evidence or supporting evidence, something like that. Okay, so here's your weekly. Now, this is interesting. This really plays into what I always talk about with converging indicators. Look at what we have. So we've got a weekly EMA where somewhere right around 64.74, and we've got 64.50 is the monthly EMA. That zone right in there is definitely in my book, that's going to be a robust support zone. So I would be looking to bid. I'd be looking to bid from there, no question. 2 moving averages, you can break that trade down to maybe just risking 25 to 30 to 40 pips. You got a real good chance of winning that trade if you get the pullback. Now, as far as a Fibonacci sequence, do we really even need a Fibonacci sequence? I mean, you could use the monthly if you wanted. If you wanted to do something on a weekly, you certainly could, but I would just probably fall back on my moving averages. I don't really see any reason to make this any more difficult than it needs to be. Something like that. Look what you've got down there. Now you've got a weekly golden zone, 62% down in there. This area right here, I mean, that's one that would be really difficult to not take the trade. Weekly EMA right there at 64.74, and you got a monthly right there at 64.56. Converging EMAs, that's going to be a key support zone. I'd be watching that one closely. Let's take this down to a daily. The daily, not really anything that's going to help us here. We're trading right at the daily moving average right now at 65.44. If, in fact, that does give way, then you're probably going to get a chance to bid down here. That would be great. I would love that. Even on CPI, I would be considering that trade. So pretty good pick right there in the Aussie. Not bad. Not bad at all. I think that's a pretty darn good the yen and the Aussie. I mean, you pick your poison, whichever one you want to trade, but there's going to be some moves here. We know that there's going to be moves, and where there's moves, I mean, we can trade it. So I hope that helps, Keith. All right, guys. Let's see. Silver, is it going to 45 plus? I don't know that for sure, Haymu. I covered silver a little bit earlier, and I like 40. I like buying pullbacks here, but that 40 level is pretty much what I'm watching closely. More than likely, it'll be an intermediate-term top, at least for a week or two, maybe not that long, maybe a few days. But if you're talking 45, if you like 45 to the top side, you've also got to say, okay, historically, where are we at? And we sort of just said that we hadn't traded 40s since 2011. So if you're talking about 45s, somewhere right up in here, it's possible. It's possible. Just, we haven't traded that high since, April of 2011. This right here, January of 1980. I mean, we're in rarefied air right now for silver. You've got the SNL crisis of the 1980s, stagflation, Jimmy Carter, all of it. That was right before Reagan got in there, 1980. So there was a lot of economic strife facing the United States then. Drove silver way up. Well, what do you have here? Well, what we have here. 2008 to 12, the global financial crisis. Basically, the financial world ended. I lived through it. It was horrible. You don't want to ever go back to those. Financially, it was absolutely terrible. So you got something right here. And now we're talking about maybe trading that way now. Interesting. These are historic levels. Could we get to 45? Of course. No question about it. A lot of the analysts out there love silver at 80. I don't know about that. I don't know about that, but they love AI. They love the needing silver to be a conductor. They love the uses of the applications, military applications of silver inside the ballistic missiles. They like a shortage of silver, not much silver coming out of the ground now compared to historical levels. So there's a lot going on in the silver market. If you wanted to be long, I probably wouldn't blame you for buying silver and being long. For me, though, I have a real problem buying right around 40. I would have to see this price take that zone out, and then we could start talking about getting in maybe to 45, but that could take some time. I think probably Bitcoin to the top side is a better play for right this minute, and we're seeing that trade right around 120. A lot going on here. All right, everybody, I'm going to go ahead and sign off. I've rambled on long enough. Long Monday session. We're going to be back. We're going to be back early tomorrow morning. I'm going to be 6:20 my time, Mountain Time, 8:20 a.m. Eastern, wherever you guys are. About 10 minutes before that CPI report, we're going to be going live, and we're going to get in there and see what we can do. Just remember that we are going to be sending out the Switch Markets newsletter later today. I've got to finish building it out, and I'm also going to have a pick of the week, a play of the week for you. So we're going to go ahead and do that as well. So we'll have that. That'll be in your Switch Markets. That'll be in your email box, and then we'll have a video there, a pick of the week. So hopefully we can get off on the right foot, and also have a trade idea out a little bit later today here in the How to Trade trading room. So if you're not a member there, head on over, sign up, click on my picture, give me a follow, and you'll get it beamed out to your email inbox right away. All right, guys, I'm going to go ahead and sign off. You're absolutely welcome. Thanks for joining me today. Always good to get going on a Monday. A little bit groggy from the weekend, maybe a little bit too much sun, maybe a little bit too much fun, but I'm getting it going, and I'm ready to trade. I'm going to be ready to trade tomorrow, no question about it. Remember, you can always trade on your own terms. You don't have to trade on anybody else's terms. Trade on your own terms. Get in there, make the plays you need to make, and get on down the road to the next great trade. That's a wrap. Okay, guys, have a fantastic trading session. Trade the action well. We'll talk tomorrow at CPI Live. See ya.